Good day, ladies and gentlemen. We are going to look at creditors' reconciliation. In activity 1, our focus was receiving a statement from our supplier and comparing it to the creditor's ledger. In activity 2, the focus was on the creditor's control account must equal the creditor's list. Both those activities, we discussed each transaction in detail. In this activity, we are going to focus on how would we approach an exam question. We are going to look at where the business receives a statement from the supplier and we compare it to our books. Now, why am I focusing on this type of recon? This is typically the type of recon where the learners are battling with. So this is why we're going to spend a little bit more time on this. If I look at the activity, Claire Traders buys goods on credit from Mariti suppliers. Use the table provided to indicate the changes to the creditor's ledger account and the creditor's reconciliation statement. Then we have the internal auditor assist that direct payments must be used to pay suppliers. And then refer to invoice 301, it was discovered that the store manager, Vernon, had signed a fixtures order form and took the goods for himself when they arrived. So here what we've added to this question is a little bit of internal control. What is important to understand is that we are buying from Mariti suppliers. So they are our creditor. So it means if they are selling to us, from their perspective, we are a debtor. It's important to distinguish between the two. Otherwise, you're going to find it difficult. Where are you supposed to make the corrections? So looking at the information provided, the creditor's ledger of Claire Traders, the statement of account from Mariti suppliers, and then the differences that were noted. So if the information is given to you in this way, I would advise to make it easy for yourself and that you don't get confused, indicate creditor's ledger, Mariti suppliers means we are buying from them. It's a liability, so all the transactions on the debit side is minus. All the transactions on the credit side is plus. Statement of account from Mariti suppliers means from their perspective, we are a debtor. So every time the account was debited, it means plus. Every time the account was credited, it means minus. We need to compare the month-end balances. Now, you would have noticed on the answer booklet, it is given to you. If it's not given, this is where you need to get the totals from. We always compare the month-end balances. Right, so now looking at transaction number A. The incorrect entry for debit note 674 in the creditor's ledger account of Mariti suppliers relates to the correct credit note 741 on the statement. So if I have a look what is happening here, we have overstated the return in the ledger account. In our ledger, we've indicated that we've returned items to the value of 8,640. But according to the statement, it was 6,840. And they specifically said the incorrect entry for debit note, which means that in our books, in our ledger account, we have overstated the amount with 1,800. Now, just a reminder, why is it debit note in the creditor's ledger, but when I look on the statement, it says credit note? The reason for that, we would issue our supplier with a debit note to show that we've returned items. They will issue us with a credit note to indicate that they've processed that transaction and that they've credited our account. So please make sure that you just understand the difference. So on my answer booklet, If you're not sure that 1,800, will it have a positive or negative effect on the balance, I would advise to do a T account. So if I look at the creditors control account, remember we made the mistake. We've recorded it as 8,640. It is supposed to be 6,840, which means that 1,800 we've overstated. So I must put that 1,800 on the credit side. And by putting it on the credit side, it has a positive effect on the balance. So on our answer booklet, number A, we are going to add 1,800 to the creditors ledger. So looking now at transaction number B, invoice 282 was incorrectly reflected in the account of Mariti suppliers in the creditors ledger. The goods were purchased from Genesis supplier. So in our creditors ledger, invoice 282 is indicated that we've bought from Mariti suppliers for 40,950. Nowhere on the statement received from Mariti is an invoice 282. This is why, because we never bought from them. We actually bought from another supplier, so we made a mistake. So I simply need to debit our account with 40,950. Why do I need to debit it? I need to minus. I owe Mariti suppliers less and owe Genesis suppliers more. On our answer booklet for number B, we are going to minus 40,950 in the creditors ledger account. Again, just a reminder, why? Because we owed them less. We've incorrectly credited our account. Transaction number C, invoice 360 was incorrectly recorded on the statement from Mariti suppliers. So if I look on the statement that we've received, invoice 360 was recorded as 20,250. In our creditors ledger, invoice 360 reflects 50,250, which means they have understated the invoice and the difference is 50,000. Again, a reminder, who made the mistake? They said specifically it was incorrectly recorded on the statement. So this means if I've understated the debit side, I need to add that 50,000. From their perspective, it appears on the debit side, I need to add 50,000 to that. So again, if you're not sure, you can always just open a quick T account. They made a mistake, so from their perspective, we are a debtor. They've recorded it as 20,250. It's supposed to be 50,250, so we need to add 50,000 on the debit side, and by adding it, it will have a positive effect on the balance. So on the statement of account, number C, we're going to say plus 30,000. Transaction number D, Mariti suppliers also purchase goods on credit from Claire Traders. Claire Traders has transferred a debit balance from the debtors ledger journal, voucher number 570. Mariti suppliers will offset this on the next statement. So what this transaction means is that we are buying from them and they are buying from us. So instead of us paying them and them paying us, they will offset this amount against our outstanding balance. So again, if you're not 100% sure what to do, you can always open a T account. So we are buying from Mariti and they are buying from us. So if they are buying from us, they are a debtor. So they've got a debit balance of 5,400. So what it means is we have taken that out and we credited their account so that it can show in our creditors ledger that we owe them 5,400 less. So this is the journal voucher referred to in the information, what they've actually done. So now what will happen in the next following month, instead of them expecting us to pay them cash, they are simply going to take our outstanding balance and they are going to deduct 5,400 from that. So then the statement of account should reflect minus 5,400. Transaction number E. The transaction on 24 July 2018 is for merchandise returned to Mariti suppliers. So it means we need to go to our creditors ledger. On our creditors ledger, it's clear there's a debit note, 995, on the 24th. It should appear where? On the debit side. But instead, they have credited it with 8,100. So what they've done here is they've incorrectly credited our account. They've shown it as a purchase instead of a return. So to correct this, we need to do the opposite. So it means we need to debit it. But please remember, when I take it out, I'm only cancelling the transaction. I still need to show the return. So when this happens, we need to always times it by 2. Therefore, 8,100 times 2. The easy part is knowing that I need to double it. But the difficult part is knowing what effect it will have on the balance. So again, if you're not sure, take that extra 10-20 seconds, open up a T account. We made the mistake, we incorrectly credited it, so to take it out, we need to debit it, but then we still need to show the transaction, so we are going to add 16,200 to the debit side. And by adding 16,200 to the debit side, it will have a negative effect on the balance. So on our answer booklet, creditors ledger number E, we're going to say minus 16,200. Looking at our last transaction, number F, the statement reflects transactions up to the 25th of July 2018. So it means that any transaction recorded in a creditor's ledger after the 25th means it will not appear on the statement received from our supplier. So if I look at the creditor's ledger, the 27th, the journal voucher, we've already done that in transaction number D. So now on the 31st, EFT and discount means that we have made a payment. So if we made a payment, we owe them less money. From their perspective, they will need to credit our account to show that we owe them less money. So for number F, we are going to minus 77,190 to the statement of account. Now, if we've done all the transactions, our last step is we need to total. Please do not forget to add the balances provided. This is a common mistake. We leave them out and then we get this completely wrong. So you need to include the 147,820. For the statement of account, you need to include the 145,016. So if I add them together, it should balance now. So looking at our next question, the internal auditor assists that direct payments, EFTs, must be used to pay suppliers. Explain one reason to support his decision and one internal procedure to ensure control over the system. So now just a reminder, checks is now outdated. We no longer use checks. Businesses do not accept checks. Banks doesn't issue clients with checks anymore. So now we're moving away from that and we're moving towards, but now we need to look at EFT payments. So now we also need to look at, but what procedures do we need to put in place, internal control, to ensure that no unauthorized payments are being made. So if I look at the memo, yes, they've asked you for one reason, and that is 2 marks for that one reason. One internal procedure, and that is equal to 2 marks. A memo will always provide you with more than one possibility. So I always say, use the memo, make a summary of these type of questions, and study it for exam and a test. If I look at the first part of this question, explain one reason to support his decision. If you think about EFT, electronic fund transfers, it's much more quicker, it's easy, it's efficient, it's convenient. I can do it at any time. I can do it from my cell phone. I can do it from my computer. I can do it at 12 o'clock at night. So there's a lot more advantages in why this is a better option to use. But now we need to make sure that we have internal control procedures so that no unauthorized transactions takes place. So this means we need to have a senior staff member that need to authorize any payments. Make sure that you have security codes for the users. Make sure that those codes change on a continuous basis. Make sure that you receive notification from the bank as soon as money goes out of your account, and also if money comes into your account. Please do not just write division of duties, because what does division of duties mean in this scenario? So if you just write division of duties, you can see that you're only going to get 1 mark. So you need to add more detail. Looking at our last question, refer to invoice number 301. Now if you go back to the information given, invoice 301 means goods were ordered for 25,000. Now it was discovered that the store manager, Vernon, had signed a fictitious order form and took the goods for himself when they arrived. Besides this missing Vernon, provide one suggestion for action to be taken against him and one suggestion to prevent this problem from happening in the future. So this is a scenario which indicates or shows us why it's so important for us to actually reconcile by taking the statement from our supplier and comparing it to our books, because we will be able to detect if there's things like this that is happening. So if I have a look on the memo, one valid point is 2 marks, and then for an unclear answer you will only get partial marks. So what can I do against this employee? You can have a disciplinary hearing, a criminal or civil charge. So I can go to the police station and I can lay a criminal charge against this employee, because what has he actually done? He has stolen from us. We could suspend him, we can demote him, we can even transfer him to another department, and we can also say, listen, you are going to pay back that 25,000 and we are going to deduct it from your monthly salary. And we provide him with a written warning. Please just don't write, fire the person. Give a little bit more detail. So now we look at this now happened. How can we prevent this from happening in the future? What procedures do we need to put in place when stock is ordered? So again, use the memo, make a summary of this and study it before an exam. 1 division or rotation of duties. One person checks the orders and the other one receives. You cannot have one person who does everything. Make sure that the stock records are updated with every invoice. Proper authorization. We cannot have a person just ordering stock without somebody authorizing that. Make sure you do regular stock counts, and you need to compare that with the documentation that you receive. So please make sure when you look at creditors reconciliation that you study internal control, practice different scenarios where, for instances, things like this are happening, where you've discovered that employees ordering goods and you are actually paying for that. And make sure that you understand the basics when we get to, from our perspective, how do we record transactions? From their perspective, how do they record transaction? Thank you very much. I hope you enjoyed this lesson. Goodbye.